we want to talk a little bit more about the outlook as we look ahead to 2024. November certainly signaled something of changing of the tide for the investment community, the higher for longer debate morphing into a back and forth over when the Fed will finally start cutting its benchmark rate. JPMorgan Private Bank has launched its 2024 global investment outlook after the rate reset. Now, it identified 5 key themes for investors to consider as we approach the new year. They include inflation settling, bonds being more competitive with stocks, and AI as the game changer. Let's dig into all of it. We have Abby Yoder here joining us on set, JPMorgan Private Bank U.S. Equities Strategist. And Abby, it's great to see you here again. So lots to dig into. And let's first start with that first point that was outlined there in the intro. Inflation is going to likely settle. How should investors be thinking about that in terms of what that means for investment opportunity?
Well, the important component of it when we're thinking about inflation is kind of like this immaculate disinflation that's happened, right? So typically, historically, what we've seen is when inflation is coming down, it's at the expense of the labor market. And while we've seen some softening in the labor market, overall, inflation has been coming down on its own, right? It hasn't been at the expense of really the job market for that matter. You've seen wages cool. But importantly, what that means, okay, what does that mean about the backdrop? That means the actual demand and economic growth backdrop has been very strong, and we expect that to slow into 2024, but to continue to remain resilient. Again, driven by that strength in the employment picture, but with inflation coming down, which gives the Fed more leeway as it relates to cutting rates.
So a lot of people then would say, right now, yields look really tempting. And so what is kind of the setup now going into 2024? Is it already as good as it gets, and now you have to kind of reconfigure a little bit?
Well, I think right now is a great opportunity in terms of fixed income, and what the setup looks like for us right now. We're optimistic on equities, we're optimistic on bonds. What that means for clients is you have more options. There are different ways that you can construct portfolios and still get to that long-term return that you're looking for, because this is the first time in a very long time, let's call it 15, 20 years, where bonds actually really do look attractive. And so there's just more portfolio construction options, I think, today than there were over the past 15 years.
Abby, AI being a game changer was one of the topic points or one of the investment themes for you guys this year. Should we be thinking about it? Should investors be thinking about that in the lens of the Magnificent Seven, or where could we else, I guess, see leadership from maybe some of those lesser known names?
No, I actually think there's going to be a broadening out. Yes, we think the Mag 7 are going to do very well next year, and that's driven by both cyclical and structural factors. Cyclical being, enterprise spend by different corporates, and then AI being the more structural part that we're going to see a lot more companies start to monetize next year. And that, again, broadens out outside the Mag 7. So we're focused on actually smaller to mid-cap companies that we think are a little bit less known in that arena that we think will do well in 2024 as they, again, start to monetize this trend as well.
I mean, many of us expected for there to be an AI rug pull for some of the names that didn't have an immediate pass-through, or it just didn't make sense how this was actually going to contribute to their bottom line here. So is in the Magnificent Seven play, is there, in that broadening out that you were talking about, is that kind of inclusive of some of the Coca-Colas of the world, the Wendy's of the world that have even said, oh yeah, generative AI is massive for us. But for the rest of us, just saying, okay, well, a lot of people have included that in their talking points. Where's that really going to have perhaps further proliferation throughout the markets?
Well, so I think there's, within tech specifically, right now it's really semiconductors that are benefiting from the monetization. Down the line, we think it's going to be software that then starts to see that. And then when we're thinking about, okay, what do we hear from companies when we're talking to them or listening to them on earnings calls and they're talking about this? And to your point, it's like in food service and it's in different industries. I think that this is going to be a cross-industry phenomenon. There's plenty of ways for all of these different companies to utilize this transformational technology that's going to create efficiencies and productivity that I think will benefit the economy just at large.
All right. Well, I can't wait. I can't wait for more generative AI. Why not? Abby Yoder, JPMorgan Private Bank U.S. Equity Strategist. Thanks so much for taking the time here with us.
Thank you.